Hello everyone, a very good morning, good afternoon, and good evening to all of the viewers from around the world. This is your host Vaibhav. In today's session, just a while back, we got the United States CPI numbers, and here the expectations were of a rise of 0.3% month on month. But instead of that, we have a below par figure at 0.1%. As a result of that, the US dollar has weakened against the major currencies. And now, in this backdrop, if we have to look at the trades, it's going to be a uphill task as there is this sharp move already in place. And if we have to now go for a fresh trade, initiation of the fresh entry, we will have to, I think, wait it out for things to stabilize, as it will be a better idea to go for the trade when things are much more optimum from the point of view of the risk and reward, and not take too much of a risk, because in any single trade we don't really have that high probability to risk too much. It is always a better idea to stagger the trades, and then whenever optimum opportunity arises, that's the point to get involved in the market. Now this is the USD JPY chart, and here just before the release of the CPI, the USD JPY was trading at around 137.30, somewhere around those levels, and now it is almost 200 pips below that level in the matter of 10 to 15 minutes. And as things stand, we don't really want to get involved in this situation, where if we want to go for any against the trend trade, if we want to go for a buy trade, that will be like trying to catch a knife. And if we want to go with the trend, that will be like risking too much, as there is no immediate stop loss in place. This prior swing high is now too far. So in this scenario, it's always a difficult task to figure out the new trading opportunities, but all we can do is see how things are shaping up for these correlational analysis, which one is the strongest bait moving ahead. So we will now mainly focus on the magnitude of this move and see which one is the best bait for the further weakness. If we anticipate the further weakness in the US dollar in coming hours, then which one is the best bet? And if we expect a turnaround after this much depreciation in that respect, which is the best currency to trade against the flow. So let's now get started for that analysis. If we omit this part of the sharp move, and if we look at the earlier price move for the day, this USD JPY was trading in a very narrow range. Not exactly narrow if we compare it with the other major currency crosses, which were even narrower than the USD JPY's range. But after having risen substantially in yesterday's session, the USD JPY was simply consolidating those gains at a price level just little below 138, and even prior to the release, it had corrected almost 40 to 50 pips from the highs, and it was hovering closer to these 137.30, and then came in this sharp move on the lower side. So if we look at the charting of the USD JPY prior to the release, it was forming the lower highs and lower lows on the intraday chart. And now that we have this sharp move in place, all we can say is that we have further confirmation for the near term bias to remain on the bearish side, and we will have to then trade accordingly. The magnitude for the USD JPY decline is almost close to 1.5 percentage point in its from, if counted from this immediate level prior to the release and its current level. Now let's compare it with what's happening in the other major USD crosses. Let's start with the AUD USD. AUD USD, as expected, has gained substantially, and if we look at its magnitude in terms of the percentage point, the rise is even higher compared to what we saw in the USD JPY. For AUD USD, the gains are around 110 pips, so little above 1.5 times. So in magnitude, the AUD USD seems to be leading the USD JPY in its decline. The AUD is trading stronger, and that is also evident if we look at the formation of the AUD JPY. AUD JPY has not really declined much compared to other JPY crosses, which have declined substantially. Now let's turn to the Euro USD. Euro USD, the gains are there, but in terms of the magnitude, the gains are muted and relatively less compared to USD JPY as well as AUD USD. So, if you are expecting the dollar to remain on the the bearish front and other currencies to keep appreciating against the dollar, then I don't really think Euro USD is a good idea to trade with. Rather, we have stronger moves in AUD as well as JPY. So those two currencies are leading the charge, and Euro USD is following suit. Let's consider the GBP USD as well. For GBP USD, the gains are substantial, but not as substantial as we are seeing the gains for JPY and AUD. In percentage term, this is just little above 1 percentage point. Of course, this is trading stronger compared to the euro, but it is on the weaker side in terms of the magnitude compared to AUD and the JPY. So we have the strongest bait in the AUD, followed by JPY, then comes the GBP, and the fourth is the Euro. For NZD, let's count these gains. Here it is also little above 1 percentage point, and it is apparently not as strong as JPY or even AUD, but it is of course trading on the same side as the rest of the currencies, and I think it has to be placed somewhere in between the JPY and the GBP. It is trading strong, but not as strongly as AUD or for that matter JPY. So if you want to trade with the continuation of this momentum, if you expect the dollar to continue to weaken, then we have better choices there. Before we can draw the conclusion, a firm conclusion, we of course have to consider the two major remaining currency crosses, the USD CAD and USD CHF. Looking at the USD CAD's decline, it is a little less than even 1%. So this is one of the weakest currency, and it has been so for last couple of days. Even in today's session, it has not really gained that much compared to other currencies. So here USD CAD should be given the last preference if you are expecting the dollar to continue to gain ground. But if you expect some turnaround, some correction after due consolidation, in that scenario, the USD CAD will of course come first. But before we say come first, let's take a final look on the USD CHF. For USD CHF, the decline is more than 1 percentage point. So USD CHF is also leading the USD CAD, and even for that matter, the Euro USD as well. So it has to be placed in the vicinity of GBP USD. So now on this whole spectrum of the major USD crosses, we have the strongest one in the AUD, which is the most bullish against the dollar, and we have the CAD being the weakest one. It is trading in a bullish manner against the dollar, but its gains are rather shallow, and as a result of that, even if we expect the continuation of the momentum, the CAD should be given the last choice, and we will have to be careful trading there. But in terms of a possibility of turnaround, even if it takes a couple of hours more for any further confirmation after due stabilization, in that kind of scenario, the CAD can be given a look, and then we can think about going for a new trade there. Let's consider now the equity space and what's happening in the equity segment. After the release of US CPI, the Dow Jones in particular has gained substantially, almost 2 percentage point in matter of just a couple of minutes as the inflation came in softer. That has soothed the market nerves. It has given fresh momentum for the bullish traders, and here the equities are also reflecting these changing sentiments. And if we look at last couple of days, it has consolidated around this price band of 33,500 on the lower side and 34,000 on the higher side. But after yesterday's gains, the Dow Jones Industrial Average was consolidating in a very, very narrow range leading up to the release of the US CPI. And once the US CPI came in, we saw this sharp move on the higher side. Now, those gains are likely to be sustained moving ahead. So, unless we have any significant reversal, I think we will do well to continue to trade on this side of the momentum, the bullish side of the momentum. And here, now the question is which one is the strongest bet and which one is the current weakest bet if we expect the Dow or for that matter the US equities to remain on the bullish side. If we look at the chart prior to the release of the CPI, it had formed this formation of higher highs after making this low in yesterday's session. After that, it has continued to make higher highs on the 4 hourly chart pattern. And now I think we will have to mostly rely on the magnitude of the gains to figure out the best bet for the momentum play. For the S&P 500, the gains are rather muted. The prior high was at 4018. After the release of CPI, the gains are there. And if we look at the gains, actually the gains for S&P 500 are much higher compared to the Dow. I thought it is only 20 points. It is actually 120 points, not 20 points. So there I seem to have made a calculating error while doing a back of the envelope calculation. So the gains are much more stronger for the S&P 500. So we will have to give the first preference to the S&P 500 ahead of the Dow Jones Industrial Average. But before I say first, let me take a look on the Nasdaq as well. For the Nasdaq, the gains are even much stronger, even above 3 percentage point, and it is able to hold on to these gains as well. So, looking at this chart, I think we have to go with the Nasdaq in all these three equity indices for the United States, as we have the best move, the best possible move on the higher side in the Nasdaq. Then it is being followed by the S&P 500, and further down the road comes in the Dow Jones Industrial Average. Now let's consider major difference in terms of the direction as well as in terms of the gains. Let's see what's happening. The DAX, as expected, is trading with the bullish momentum. It has also gained, but slightly less compared to the gains we are witnessing for the US equity indices. And since this is the start of the US equity session, it will be better to keep trading with the US equity indices rather than trying to get involved in the European equity indices, which are going to close in a matter of next few hours. And also the momentum is less. So my choice still remains with the Nasdaq. And before I wrap up the session, let's see what's the development for the FTSE 100. The FTSE 100 is struggling to hold on to gains. After the release of CPI, it did jump higher, but all those gains evaporated, and now slowly and steadily it is trying to climb back again. So it is a interesting development here, and it will be it will be worthwhile to see how things shape up. Maybe in tomorrow's session, after we come back, we can think about going in for the fresh trade. But as things stand, the my first assessment still stands where the momentum is with the US equity indices, with Nasdaq in particular, And then in European equity space, we have DAX also trading stronger, and FTSE is strong, but the gains are rather muted, and it is also struggling to sustain those gains. So it should be the last choice on anyone's mind if you want to take the risk after these sharp moves are already in place. So, everyone, that's my assessment for today's session of correlation and regression. You can raise any query, you can share your ideas, and I would like to talk it through. So, if you have any, just type in the chat box. And if you are not really typing anything, then I think I will have to take my leave and come back tomorrow with the fresh assessment of the market developments as things stand at that point in time. So this is all for today's session of correlation and regression. I will be back tomorrow. Thank you all for joining in. See you next time around. Till then, have a profitable and a fabulous day ahead. Goodbye.